What's up, guys? It's Sunday, May 21st, 2023. I got a few notes I want to go through with you guys. Some interesting ideas I have this week. First step, I want to take a look at S&P. Futures are open. Real quick, just for an interesting note. We still have 41.75 as a huge liquidity area. It's the largest liquidity area on the market, on the chart right now. So expect a retest of 41.75 at some point. Keep that in mind. We also have this 42.10 area and like before 42.50. So 42.40, 42.50. Above that or below that, we're maybe starting to get some 4,300, but we still have 4,000 here and 40.50. But mainly that 41.75 is the biggest area of liquidity. So expect a move to 41.75. When we get there, I'm not sure exactly which direction we're going to go. So we're going to talk about that today. Obviously, getting to 42.40 too fast, we're going to see a rejection and come down here. And really even 42.10, depending on if that's still there tomorrow morning. But we do know there's kind of this line in the sand guy down at 41.75. 41.80 looks like support, and that might be a stop loss, 41.75. So keep that in mind. We need to pay attention to what the market does when it gets there, not if, when it gets down to 41.75. So let's take a look at futures. Right now we're sitting at 4,200. Futures are open today. I've got a couple interesting things I want to talk about. If you see where we closed and where we are at right now, this is a very interesting spot. So let's take the closing print of Friday was 42.0475. That's going to be bullish to get above that. So let's put a line there just for fun. 42.0475 was the close, and if you look to the left, we really didn't confirm a breakout, because if you see here, right there, right there, right there, and right there, we technically closed below these last two areas. And I talked about the other day, we have green candles that are still open. This one here that they would likely retest. This guy here, they have now filled that in with a red topping tail. So it's very possible that the top was in. We can get a few rejections at that 42.0475 area, even back up to 42.10. It's very possible that 42.10 area will be the top. So I'm going to talk about two scenarios, bullish and bearish, because I don't know which direction it's going to go. They left that open on purpose to see, are we actually going to break out of this area or not? We broke above it, but we didn't break out. That's extremely important to know. So what do we have to tell us? Obviously, if that becomes support at some point during the week, if we get back above that and we can start holding that area, then we can look for a bounce higher. Obviously, if it stays resistance and we sit underneath it, look for our move lower. We still have a trend line to pay attention to, kind of like that. And then if you want to get even closer, we still have this kind of wedge pattern. And I'm going to pull up QQQ here in a second, because that's going to be more telling than SPY. So clearly we have this trend line here, and oops, not that one, this one. So we're going to leave this trend line on the board. We kind of have this wedge, right? as you can see, they spent a lot of time at the top, but a little bit of time at the bottom as well. So usually the more time they spend on one of the sides, that's the side they're going to break out. So we'll see. I mean, to me, it looks like a breakout, and so, I would expect higher, at least to refill this green candle up here, if you can consider that a green topping tail. I mean, this is what normally a green topping tail would look like, that they would come refill. So that might or might not be important right there at that 43.27 area. But we need to keep that in mind. If this line 42.04 is support, then we're going higher. If it stays resistance, then we want to look for a break of this trend line, or at least a retest of this trend line. Down into the 41.75 area would make sense. All the way down to 41.50 is possible. And then also, one thing that I talk about a lot, that you'll hear me say over and over, is a failed breakout is always stronger than the initial breakout. And I want to clarify that a little bit, because some people are new. But let's say you have a breakout, an initial breakout move. You have shorts covering here, pushing the market up, and you have buyers pushing up. Typically, if that were to fail, then you would have shorts moving in, getting in, back in to their position at that same entry. You'd have longs getting stopped out, which would be enough momentum to break the other trend line, which would stop everybody else out and trigger more shorts here. So if you had a trend, if you had a nice breakout here, and we failed and we got back below that area, then you would see a double rejection, stronger than the initial break higher. You would see almost double, not really double, but substantially stronger move in the opposite direction if a pattern fails, because you have like 4 sets of people panicking basically, versus just 2 sets of people. Right now we have sellers panicking and buyers panic buying, right? If you break below that, then you're going to have 4 groups of people panicking. So, look for that kind of move. If we break this trend line, we know for fact we're going to at least test this trend line and get lower. They're not going to hold this area. If they get down below this trend line, they're not going to hold this area, 40.65 area. That's not going to be support like it was these last 2 times. You might get a small bounce. You might get one of those moves like a breakdown and retest or whatever, but ultimately it's gonna be like a 99% confident trade that they're gonna go lower if they break this trend line. So we're gonna keep that one on our board here. We can take that one off for now, but I also want you to notice though that in the long run, we still have kind of a more major trend line, if you want to say that's a trend line from COVID low to this point, so realistically, even if we broke that, we would probably see a bounce at the 3900 area, 3880, 3900 area, but that would be a pretty sick move, right? So let's get into some expected moves. Here's kind of what I'm thinking. And I'll talk bear first, because that's what I like the most. Because again, breaking below this trend line would be a very quick move down, very quick move down, very quick move down, very quick move down, right? So we would see a very quick move down with a few days follow through. Would be a pretty awesome swing trade lower. I want to spend some time. Let me first open a new window. Nope. Trading view. Let's look at Tesla real quick, because this is exactly what I'm talking about as far as a failed breakdown. So, as I've said all week, I've been screaming Tesla bulls, right? Because what did they do on Friday? Even though our calls didn't print necessarily, we're still in swing calls for next week. But for one, you've got a really strong 3 green update move, right? So we could even see some consolidation for another day or two. But ideally, like, we've broken this trend line where we should have rejected. So now all these people up here, especially over this higher high, you've got panic buying and also panic covering, short covering, because you got 2 sets of shorts. You got a set of shorts here that are panic covering, and see how that was support. That was support on Friday. This peak was support on Friday. So you have panic shorts covering. You got buyers buying right here because they just put in a higher high. And then you also have these shorts that were swing shorts who said, okay, we're going to come retest this. Okay, I'll just add on to my position here, and we'll come back down and put in a lower low. These people just got stopped out from this move, right? So you have all these people that woke up and they said, oh, we're above the trend line. This is a problem. So they're going to start covering, right? And that's going to take them a long time to cover. If they've been in a move like this down, it's going to take them a long time to cover. So we're going to see our move back to this side of the trend line relatively quickly. Excuse me. And possibly even breaking that trend line. If we did that, we could get really wild and see our 215 area retested. Probably not. Probably just up to this 207 area. But, and then again, this has been resistance anyway, right? 1, 2, 3, 4, ultimately 5 before it failed. So 5 times resistance. They're likely going to retest this 198.40 area. I would expect that. Getting above that is when we can start talking about really wild stuff. But keep that in mind, because nobody's talking about this that I've found. Nobody on Twitter or stock twits or whatever it's called. Nobody's talking about how bullish Tesla is right now, and I could just be completely wrong. And breaking back below this trend line, you can make this trend line your stop loss basically. Or really, if you wanted to give it room, down to 177 would be your stop. But I think breaking above that trend line was really key to pushing this thing back up to 198. And the reason I said that was because, and here's what we're going to talk about today. We had a buyer from this 166 area, bought all the way up. I'll color code this here. The buyer was right here, 166 all the way up to 198. Institutional money pushed Tesla up, right? And then they had a retest of that area down here. We got back above this area, and what did they do? They started to push it up there, and then ultimately they ran it. The institutions ran it from there up to here, right? I don't know if you can see that really. But they ran it all the way up to here, right? They ran it up to here without a whole lot of resistance at all. Like, they just ran it up within 3 days, right? 1, 2, 3 candles. They got a 30-point move within 3 candles. Actually, 2 candles, really. I mean, that almost got there. So within 2 days, they made a $30 move. You got to keep that in mind. What did they do here? They got back to 165. And they pushed it up. Now this one took 1, 2, 3, 4, 5, 6, 7 days, right? So that's why we're in next week's calls, because it could take a little bit longer. But I want you to look at this and say, okay, 1, 2, 3 times before they've made a move from 165 up to 198. That's institutional investors buying. They're buying this dip, right? This one was kind of a fluke thing. They were like, okay, we're going to stop here. We're going to find the bottom. And they failed. And they're like, well, whatever, we'll get back out. But they came back to the entry and they pushed it way up. And they're like, okay, this is valid now. Let's get back in here. They got below it and they just had some freebie days where they could push it back up. But ultimately, the fact that they, pushed it back up here, to me, is bullish up to 198. So let's take this same theory and go over to SPY, and first we'll look at the bear, and then we'll look at the bulls, right? Where's my little rectangle? And let me get my notes. Bear. So let's take a look here and see, okay, are there any moves that are important that started at the same spot and ended at the same spot? So you've got a move from here down to here. That was pretty significant, right? You got 1, 2, 3 really big days. So let's mark that one for now, and we'll come back and see if that's important, because I was a huge institutional seller. And I'll change this color to red for now so that we can distinguish it, because we're going to look at bull here in a second too. But so we had a significant move down from this 4150 area down to 3740. So let's see if that's important. Are there any other moves that started here? We got this one. This one pretty much started at that candle right there. $41.40, and yeah, they pushed that one down. Even oh man, let me take this stuff off for a second. So they pushed that one down to at least here, right? And you can say that one could even be down here at the bottom too, but we're just kind of analyzing. So let's see, are there any other big moves from this area right here? There's this day, which was probably a Fed day, and they didn't get as far, right? So they only got from there down to there, and really just down to there. Why is this not working? Right, so that's an important bear move that started about the same area. And then you have another one right here, move down, and that one could have been weaker too. That could have stopped right here, but we'll say to there. So you draw a line. Let's draw some lines and say, okay, so from anywhere around this kind of 4150 area down to at least down here to 3850. So 4150 to 3850. You've seen 1, 2, 3, 4 times they pushed it down. So in theory, they would do that again in theory. If you get back below this line, which would break our trend line, we would see a pretty rapid move down to 3850. That is kind of the goal right now, is a break below 4150. Look for that same move. You had 1, 2, 3, 4, 5. That would be a valid move. This is an institution getting out of the market, right? At least to there. And you could even look for a panic sell down to at least this area. So potentially down to here. You've got sellers still down here, so even to 37. So you don't want to be buying dips. When we break this, you don't want to be buying this dip or any of this junk. Now this might just be junk for a few days, but ultimately they're going to move down to this 3850. So this is important. 4150 down to 3850. That's our bear move, right? My only problem with that is, 1, Tesla looks bullish. 2, if you jump over here and search stocks on YouTube, sell-off warning, major divergence, never seen this before, stock market will crash by 45%. I warned you, this is on, right? So you start looking at this stuff and you're like, what is going on, everybody is bearish. And when everybody is bearish, and including me, and I'm saying, hey, this breakout was not a valid breakout, look for a failure, you also have to think, okay, so if everybody in the world is bearish, then what's the easiest thing to do? Is rip the market, right? Just like those last 2 days we had here, everybody thought, okay, we had 2 breakdowns, so we're going to get another breakdown from this area, and it's just going to collapse, and recession and all that kind of stuff, right? But it didn't happen. They pushed it higher. So we also want to be aware of these moves in the bullish direction. So let's humor me here for a second. So since we don't have anything over here, we got to look over here, right? So let's take a look in here and see, okay, were there any huge green moves that were about the same distance? So we'll start on the left here. We're here right now, right? So let's say, this would be considered a valid move. I'm going to change these ones to green. So from 4,200 up to 4,350. That's a pretty legitimate move, right? You got a big move right here. This was a little bit above 4,200, but 4,200, that was in one day. 4,200 to 4,400. No, this is a day. This isn't a day. That was a crazy day. From, a little bit above 4,200 up to 44. That's a pretty big deal, right? You have one from here in this 4,200 area, push it up to at least here, 43.88. So they came up short of 4,400. But within 2 days, guys, and actually they started down here, but in 2 days they went from 4,200 to 4,400. A 200-point move in the SPY in 2 days. This one was a 200-point move in SPY in 1 day, right? Let's look back over here and say, okay, you could argue, from here to here, but actually it's even bigger than that. But ultimately, let's just be safe and say from there to there. 4,200 to 4,360, right? Let's look for some smaller ones. So then we see this other line here, 4150, which we talked about was the bear scenario. So we got 4150 up to at least 4,300. I'll make that a different color green. Here's one, 4150 to 4,300. Keep right clicking. 4150 to 4,300. That's a big move. 150-point move in a day, right? 4150 to 4,300 in 2 days. 1 green day, 2 green days, 4,300. Here's another one. Same week. 4150 to 4,300. Now this one took 3 days, but basically you could argue, and really they got even lower, but you could, just to be safe, you could say, 4150 took 3 days and they were at 4280. And then you could also make the argument that you had this red day up here, right? Or at least to here, because you got a topping tail there. So let's leave it at the top of the topping tail. But, 4,200 to 4,310 area. So if you're looking at this from a bull perspective, you can see a wild move higher. And the fact that nobody's talking about that, you know, you get this huge move here. You even had one here that we didn't really count because it came up short. But really, from 4,200 to at least 4,300 could happen in one day, a 100-point move, right? And then if you get above that, you could say, okay, really, we've got even bigger moves, because, you know, we had 4,200 up to 4,580, 4,200 to 4,630 within a couple weeks. You know, now he failed right here, so I don't know if that's going to happen or not, but you could say if they recapture this 4,330 area, you could see a very wild move. So I want to keep that in mind. I'll delete the big ones off for right now because I don't want to be too bullish. I still think fundamentally, you know, we're in a bearish scenario, but the bullish scenario would be, you know, and really they had these moves down here. You know, we could see we got there. That was an area of support, and then it happened to bump into a trend line, and we got this move already, but we could potentially move to 4,300, 4,310 very quickly. So I want you guys to keep that in mind. You know, if this 4,200, 4,204 area stays support, if we wake up tomorrow over it, I would kind of imagine that we'll get to 4,300 before we get to 4,175. It would be nice to pull back to this 4,175 because I'm going to be pounding the table saying, buy this, right? Here's a new guy, 42.45. It's already showing up, right? So this 42.50. I mean, to me, they could just chop up here, right, and then shoot higher to 42.50. That would get me to 200 on Tesla. That would get a bunch of stocks extremely bullish. And then after everybody's extremely bullish, they run into this resistance, and really it could even be down here, you know, 42.90 area, 4,300, and they could say, okay, the bull market is over, right? And then they pull the rug. And at that point, you know, our trend line will be up here, and they could break the trend line, and then we would be in our next major move down. You know, so just keep that in mind. You know, getting below 41.50. Getting below 41.50 is going to be a bearish move down to, at minimum, you know, 39.50, but 38.50 really would be the long-term move down. And if we're doing that, then I mean, just watch out below, because I don't know if they're going to rescue it this time. You know, we're getting to the point. So take a look at this. Whoops, don't take a look at that. Google market crash pattern. This guy right here. So I can't read that one, but so let's take that and look at the NASDAQ here, because I don't have anything written on NASDAQ yet. But if you look at, let's go to the weekly view. If you look at the weekly view of the NASDAQ, and then you compare that to this graph, you had the 2020 COVID crash, right? The bear trap, the extreme rip. I mean, just absolute, just rip your face off, you know, for a full year. And it's just never been that bullish before. If you want to zoom out and look at this, I mean, you have from COVID From the end of time, it went from 1,000 to 6,000. It's never been above 6,000, right, until this. But even still, 1,000 to 9,000 from the beginning of the Nasdaq, and then you went from 9,000 to 16,000, so 100% gain in literally a year. That's just absolutely unheard of, right? So that's why we're in a recession, and this is going to come down because it's just and who knows where it's going to fall. I mean, it could stop here at 2016 lows. It could eventually just crash over the next 5 years, down to 1,000. People don't think so, but I mean, the difference in this crash is everybody's seen a depression, but nobody has ever seen a currency collapse. And if the U.S. dollar collapses, and we'll talk about that in a second, but if the U.S. dollar collapses, then there's no recovering. There's not going to be a bounce. America hasn't seen that one yet. So this wouldn't be the depression. This would be the unraveling of the American currency. So, keep that in mind. We're right here. We're the return to normal. We're breaking out of these area, putting in higher highs. We are, and the S&P looks exactly the same, but everybody says, okay, we're breaking 4,200. That's bullish for the next run. We've got this big trend line going on here, and it's just going to keep going because the market always recovers. That kind of thing. You've got major moving averages. Let's go change this to, that's not what I wanted. I wanted this. So we're back above the 50, right? We're back in a bull trend, right? We're back above it. But then again, everybody's saying, okay, it's time to buy. Let's buy the dip, right? We're going higher. We're going to 5,000. But this pattern here would say, no, that's what happens before the recession, for the crash. And then normally they will put in a lower, look at one of these stocks that crashed, right? They all did the same pattern, so we can really use any of these. But they crashed, they came down, everybody said, okay, this is bullish again, and then eventually they even went lower and broke the trend line, and they never recovered, right? It's just been in a bear trend the whole time. UPST, remember how exciting everybody was about that one? I mean, look at this thing. It went from $23, which this one could do a nice pop, by the way. Keep this one on your list, UPST long. But I mean, look at this, dude. Like $20 to 400, and it's come all the way back down. When PLTR took off, ripping, I said, this is a $15 stock. Like, don't buy into the hype. And they squeezed, and they got up to 45. But and this is like what supposedly the government uses. Like, they're the best security software or whatever. That should have gone to the moon, but they're not. They broke lows, right? So why do you think SPY's not going to? Like, they all totally could. Anyway, Tesla. Look at Tesla. I mean, they had this massive move up, and then they had some, attempts again, but ultimately, once you have a blow off top like this, once you go vertical, there's no recovering from it. It's just dead forever. And Tesla, as soon as we get to 200, we're gonna short this bad baby down to the next move. I don't know if Tesla's going to go bankrupt or whatever, but I wouldn't be surprised if 2 years from now, if Tesla's filing bankruptcy. Just saying. As soon as Elon's gone, Tesla's going to zero. Like it's just gonna be a penny stock, and we're gonna say what an amazing move from nothing to a billion to nothing, right? So, I mean, if you don't believe that, look at brands like Ford. I mean, well, not that one, F. But I mean, everybody said, you know, oh, this is the best stock in the world. You know, it went up. I don't know how many times this is split, but you know, it went vertical, right? Ford did, and that was in the, you know, 2000s, and you know, it's bounced a few times, but for Ford to be an $11 stock, that's crazy when, you know, Apple is at all-time highs. So let's take a look at Apple real quick. This is on my short list. And I want to, and then let's pay attention to this, and then I'll leave you alone. But there's a pattern here that I want you guys to recognize. So, and it's right here actually, and it's replayed itself out. So, and I don't think I've seen anybody talk about this pattern before, but we're going to look at Apple, Tesla, and gold. And they're all the same pattern. That's why we're going to be short gold, short Apple, and eventually short Tesla. But so you have this kind of like lower high thing going, but higher, or your lower lows but higher highs thing, right? And basically, you know, they came up, they bounced, they finally got back up to the top, and they got rejected, right? That's no surprise. Everybody said, well, that was just a retest of the highs. And they got all the way back up, and everybody thought, okay, this is going to take off. But they hit this trend line, and they ultimately failed. And they put in a lower low. That is really important that they put in a lower low right here. So they got all the way back up again, and everybody says, well, if they get that high, you know, if they've taken out this entire bear move, then it's over. You're like it's bullish again, right? But it's really not, because all we have to do to create another move down like this and put in a lower low is to break the trend line. And we have a smaller trend line we can use to help us get in early. But what did I say? Breaking a failed pattern is always stronger than the initial pattern, right? Well, this has already come up and got rejected to like almost the penny. Got rejected, you know, to our prior area here. So 176.38 was where our line was. Open was 176.39. So literally a penny from our short entry, and I missed it. But anyway, it's just starting, so we're going to get into this one. But breaking, so we had this wedge pattern going up here. We broke out of it too fast. We didn't like consolidate and then break out. So we broke out too fast. So breaking under this trend line will be a pretty quick move down to here. And if that breaks, which it could cause a bounce because it was prior resistance, 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 it could flip to support and we'd see another move higher. But breaking that trend line, you know, this 167, especially if we give up 166. If we give up 166, then we are going to have a pretty rapid move down. Like, pretty quick, right? Within a couple months, we'll be at 100. And ultimately, I told a lot of people this. If you've been around long enough, I said Apple is going to $85. And nobody believes me. But, you know, we just have... I mean, we've never... Here, if you look at... I promise I'm going here with something. But, you know, if you look at this, they came up, broke out, retested, bounced. And then they never retested this this prior high. They just took off, right? So look at this chart of Apple, and look at this chart of like Tesla or something. Here, let me make this easier. I learned how to do this the other day. So, like for example, or instead of Tesla, let's do one that's already crashed, like Plug, for example. Of course, that one's not going to work. But anyway, what I'm getting at is, we could definitely see a move down to 80 or lower on Apple. So that just doesn't look bullish to me. It doesn't look like a bull flag because it hasn't spent enough bullish time building a flag. Like it's just in a channel, in a downward channel. So Apple short, especially under 165, you can go ahead and try to get in early if you get like August or September. But I really think we're going to retest this prior pivot that we never did. And then the same pattern right here. Let me get back to the daily chart. And this is why I'm thinking about shorting gold. One, because supposedly JP Morgan is shorting gold. But this same pattern of putting in a lower low, but then retracing 100%, that was a pretty bearish move. So we had like this, like there's one, and then there's one, and then everybody said, okay, the top is in, or the bottom's in, so we're going to go higher, and then they failed again. So if you go over to gold, now let me try this, GLD. No, that doesn't work either. So, actually, GOLD. Now let's just look at gold for a second. We're doing the exact same thing. We put in a high, came down, put in the same high, came down farther, put in the same high. So to me, because that lower low, the expectation is going to be, we've already broken below this channel here, and I've kind of got this line at 1997 or 2000, but to me that means the unraveling of gold, and we've already broken below this here. So look for another move here, but this is the main pattern that I want you guys to look at. You go back over to Tesla, and they have a very similar idea. They came down, put in a lower low. This one couldn't even get back up before ultimately it failed. And to me, it just looks like everybody's talking about, gold is breaking 2000. It put in an all-time high a couple weeks ago, and we were in calls. That was cool. But, ultimately, I think because we put in a lower low, that's going to invalidate any breakout up here. And I don't know why I think that, but I just mostly thinking about Apple and how it reacted. But I want to look at Apple short, especially under 166 for a long-term swing short to the $80 area. So a 50% move down, which would obviously crash the S&P and the Dow Jones because it makes up 3% of the S&P. Gold I like short. Tesla I like long to 200. But the S&P, don't miss the move higher if we get it. We could see, holding that 4200 area, We could see 4,300 within a few days and even higher, right? We have this whole area. This whole area is institutional buying, pushing it up to 4,300. And ultimately, I mean, we could even get up to some of these crazy moves up here, 45. Potentially, we could move up there quickly, like just like this move. We could move up there pretty quickly. So I would say if we don't break 4,200, like if we wake up, let's give it 4,175 because that was this. If we don't break 4,175 and we're maintaining our triangle pattern here, like, because we're still kind of in this one, if we're maintaining this and we get down to 4,175, that'd be a buy area to go up. If we lose that 4,175, then we can see our move down. But also, I just want to say everybody's bearish, and so I think 4,300 is on the table for this week, and I look for that move. So I'm going to be probably mostly in calls next week, and until we break 4,175, we might get a double test of this. Let's say that if we get a double top on this, one day I'll learn how to use TradingView. If we get a double top of this, and even break it a little bit, that might be enough to come down. But really, I'd like for this to really extend, get way up here, and then break it. And that's going to be our move down. So keep in mind, failed breakouts are always stronger than the initial breakout, just like this failed short area is going to be an extreme move higher to 4,300 and possibly more. And I wouldn't really feel comfortable shorting at 4,300 necessarily. You've got some resistance here, mostly you got resistance up here, but getting above 4,300, look for another 200 point move higher. So a 300 point move either way. 42 to 45 and 42 to 37. That's kind of the 300, 400, 500 point moves coming to a theater near you. That's about all I got. I didn't cover. I said gold short, Tesla long to 200 and then short. Apple, look for a short, once this breaks. And the reason is because of the dollar. DXY has held our number here. It's been support. So ultimately, if the dollar continues higher, and honestly, it could just make a big W, probably around here, 108. But if the dollar moves higher, stocks go down. That's just, on the long term, that's how that works. If you scroll out to the monthly, we could see a pretty explosive move of the dollar because this was resistance, and now it's support, right? It was resistance here. They got above it and squeezed. And this area was still kind of new, but basically, they got above this 103.50 area and ran it. So we got the same thing going on here with these little rectangles. Let's say 4,300. 103. 103 to 120. 103 to 119, 120 area. So it's very possible that they just came up short and they want to run back to this 103 to 120, which would be enough to crash the market. I hope I answered any questions or confused you enough to ask some. Thanks, guys.